In this video, we're going to talk about support and resistance. Support and resistance are probably the most common things talked about when reading charts, and probably one of the most essential things to understand. Support and resistance are used every day in every time frame. These are price levels where the stock finds support when it is falling or finds resistance when it is rising. The more times the stock bounces off the support level or bounces off a resistance level, the stronger that level can be. If it breaks that level, it will usually indicate a breakout to the upside or a breakdown to the downside. These support and resistance levels are typically both support and resistance levels. Once a stock finally breaks over that resistance level, it will now become a support level. The same goes for the support level. Once the stock breaks down through the support level, then it becomes a resistance level. It will be hard for the stock to break back up past that level because this is where a bunch of buyers and sellers have been battling it out. And that's what makes these levels significant. You have buyers wanting to buy it, sellers wanting to sell it at that significant level. The important thing is finding those levels. How do we find those levels? Let's go over 4 specific ways to find these significant support and resistance levels. One way to find a good level is by merely looking at the historical price action. Look to see where the stock fell last and made a clear bounce. That level becomes a pretty strong support area. Or when a stock makes a big run and makes a clear reversal, that's another clear level. Of course, as stated before, every time the stock bounces off a certain level multiple times, it can make it a stronger support or resistance level. You can also look for areas that the price action has hung around a certain price for a longer period of time. This is also known as basing. It is showing you that it has had a hard time moving away from that level because traders are having a tug of war there, trying to figure out should the stock go up or down, so it just kind of stays in the same area. Another really strong thing to look at is the previous day's open, high, low, and close, or OHLC, on an intraday chart, so that's smaller than a daily time frame, along with all-time highs. It can be easy to see these support and resistance levels. A stock will often bounce off the previous day's high or low, and every trader sees when the stock is about to go to all-time highs. It just depends if you think it will plow through that level or if it's going to bounce off it. These are important levels because a lot of traders' scanners rely on them. Third, you will find many significant levels tend to be mental support and resistance levels. These mental levels are whole numbers, usually being divisible by 5. For example, a visible resistance area for a $98 stock might be $100, or a $7 stock might struggle to get past $10. A lot of smaller stocks find mental support resistance levels around the even dollars and the 50-cent and even the 25-cent area. And lastly, some great support and resistance levels are using indicators. One of the most popular ones is called the Simple Moving Average, or the SMA. This will always be accompanied by a number. For example, the 200 SMA. This is calculated by adding the closing price of the last 200 candles, then dividing it by 200, giving it a simple moving average. These can be on any time frame and will change with the time frame. But one of the most popular ways to use SMAs for support and resistance is using it on the daily chart. Some people even refer to it as a DMA for a daily moving average, even though it's really just an SMA on a daily chart. Some popular SMAs are the 20, the 50, the 100, and the 200 SMAs. I would say the most popular is the 200, but there are many, many more that traders like to use. You may hear about EMAs as well. These are exponential moving averages. And this is the exact same as an SMA, except with their equations, there is more weight on the recent price action, giving it a smoother appearance look. EMAs are typically used more for intraday charts, and SMAs are typically used for the larger time frame charts, like a daily chart. But they can both be used for any time frame. In summary, this is just 4 ways to find support and resistance. Some people think that support and resistance will be accurate to the penny. This is usually not the case. These price levels are more like price areas. They won't always bounce off the level perfectly, the historical price action on their chart. It can be helpful to just think, what are other people doing? Are other people looking at that certain level? Was there a lot of volume or trades being made around that certain price? We'll go over more ways of finding support and resistance. So I'll see you in the next video.